Silver's entering a perfect storm, a collision between industrial demand and investment demand.
If that sounds familiar, it's because you've probably heard it about 50 times this week. Same voice, same calm confidence, same certainty. And here's the thing, the idea isn't wrong, but when the words start showing up everywhere at once, that's when investors need to slow down, not speed up. You watched the dollar get diluted. You watched money printing turn into policy. You stayed patient while other assets ran. So when the narration finally matches what you've believed for years, it feels validating. But conviction is strongest when it's earned, not when it's delivered in a perfectly calm voice by something that doesn't understand the numbers it's reading. If the story is real, it should survive without being repeated 100 times by an algorithm. What we're seeing right now isn't one guy. It's automated systems pulling bullish narratives, remixing them, and publishing at scale. That's why the images are slightly off, the numbers drift, and sometimes the language shows up a little too fast. None of this means the silver thesis is wrong. Industrial demand is real. Investment demand is real. But real assets don't need a narrator. They need evidence. That's why I spend time on things like understanding valuation metrics, having an exit plan, and sharing what I know about Mexican numismatics. Not confidence delivered by an AI voice. So lately, you might have noticed something strange happening with silver and the precious metal space on YouTube. A lot of different channels, but this same voice, this same AI voice, and it's absolutely peculiar. I know the YouTube algorithm, if you watch one of these videos, it will start recommending as your next video or on your recommendation screen the same types of videos. And this Asian AI guy, which a lot of us are calling on Reddit, is just popping up all over the place. But it looks very obvious from what I'm seeing that it looks like the creator. There's multiple channels, and it's very difficult to know which one is the original channel. But it really looks like they're just scraping all of YouTube for content, transcribing that information, feed it into an AI, and then it basically rewrites everything in AI language. And then it's mass produced across many channels. And then you have this AI guy who very clearly, maybe it is a real human, the image of the Asian guy. But I mean, the talking and everything else, it's very driven by AI. You could definitely notice the frame skips and everything else. But a lot of what you're hearing from him, you have heard from other creators on YouTube. And I mean, it just, even what you're seeing in the background images, the charts, the numbers, they don't align. They kind of just give it away that this is AI. I mean, one of those channels posted a comment from the alleged creator himself. It was the AI guy wishing everyone a Merry Christmas. He had a very obvious AI image of American Silver Eagles sitting on his coffee table there. There was a Christmas tree in the background, and coincidentally, it was snowing outside the window. The other dead giveaway is that the videos don't have a flow from one to the next always. There's sometimes these interruptions of narratives. I saw one on Christmas Eve where you had the Asian AI guy tell you that, oh, we're about to have a very significant silver correction and platinum is about to take off. The irony of that is platinum has taken off. Actually, right now, it is over 10% on the day on the futures. I believe that's a limit up. From my understanding, 10% is limit up. But silver has not corrected. Silver, if anything, has absolutely taken off. And then meanwhile, there's a whole nother video where he's talking about limit up. And in Shanghai, it's trading at 82 and it's going to trade to 100. There's so many narratives just going around at once. It doesn't make sense. There is no transition from one video to the next that kind of aligns. I wanted to recap today, the day after Christmas, the precious metals peak indicator scorecard. And I mean, this is a very fluid at the moment. Things are taking off. I'm looking at silver live right now, and it just hit $75.60. So it's even higher than what I have here. Gold is even higher. I have gold right now in front of me quoting at 4,532. So these are now even slightly updated, even though I put this together not too long ago. But this scorecard was created to give us kind of a strategy for an exit plan. You know, how close are we to some kind of peak? And the peak I have here as the benchmark is essentially the 1980 normalized targets versus what the prices are right now currently in the market. And I've had several people since I first started talking about this tell me that, oh my God, 1980 is an outlier. The Hunt brothers cornering the silver market, that was artificial. But I'm going to repeat it again. History is written by the winners. Losers don't have a say in history. It's written by the winners. So it's a convenient narrative to say these two brothers went and tried to corner the market. If you read the real history, they went around and they gathered investors throughout the world. There was other huge investors throughout the globe that were also buying silver, concentrated positions. So to hear this nonsense that it was an outlier, it was not an outlier. I mean, what you have today, then somebody in the future could say an outlier, where we have a huge pickup in industrial demand, and now at the same time, we're having investment demand coming in the picture. Now, what's going to happen? 50 years from now, somebody's going to say, oh, 2025, when prices started rallying, oh, that was an outlier. So is that all we're going to hear throughout history? Is that everything is an outlier? So no, to me, 1980 is not an outlier. And the first two measurements you're seeing, we talked about them in the past, is where we adjust the 1980 peak nominal price, we adjust it for the M2 money supply. And by making that adjustment into days dollars, and I have a range for both of them because the blow off top that happened in January 1980, it happened in days. It did not take a whole month to happen. So we have that range because it happens in such little time. And for gold, that range is 7,670 to 11,050. And for silver, it's $429 through 647. And that's a fluid figure because the M2 money supply is almost always increasing. So as the Fed publishes the next M2 money supply, this figure is subject to change. It's only going to grow larger. And so the other two metrics I've always highlighted are the gold and silver ratio, which in 1980 reached a 15-to-1 ratio, and the Dow to gold ratio, which in 1980 when plummeted and dropped to a 1-to-1, where the Dow Jones price index was equal to the gold price per ounce. So we are far from the peak. This is something I've highlighted on the channel various times. I believed it in 2008 and I believe it today that gold and silver are in secular bull markets. And what I've studied of secular bull markets, and I might catch some flack for it because I'm putting actual dates here, but these are just estimates. And this 80-20 you're seeing here is also just an estimate. But it gives you an idea. What I'm saying here is that in secular bull markets, 80% of the gains happen in the final 20% of the time. And so if we may look at this 10 years from now, 20 years from now in retrospect, it's not actually going to work out to 80-20. 80-20 is an approximation, but it gives you an idea that the majority of the gains happen in a concentrated amount of little time near the end of the full secular bull. And I put the year 2000 as the beginning of our measurement time period because a lot of people associate Gordon Brown selling the UK's gold reserves as basically the beginning of the secular bull. It was the ultimate capitulation that he sold all of the UK's gold reserves, and since then gold has only gone up in price. And so a lot of people look back and say that was the benchmark. That was the start of this secular bull. And I have here simply as an estimate, just to give you an idea of how I'm thinking of 2030. Um, 2030 is potentially, give or take. Maybe it's 2028, maybe it's 2032, maybe it's 2034. We don't know. But I do believe that after gold's breakout in 2024, this is the beginning of that final 20% stretch of time where the majority of the gains are going to happen. And I talked about this before. The crowd is not even in this. I mentioned Wall Street Bets, the largest investing subreddit on Reddit. It is the largest one by far, almost 20 million members. And this whole week, they've been talking about putting together a list of their big gainers who they think are going to be the big gainers for 2026. And there's nothing related to gold, silver, or miners in there at all. And over the last week, I've seen two posts where folks shared screen grabs of their gains in metals. And 98% of the replies were along the lines of, it's a bubble, it's about to burst, too fast, too soon. Meanwhile, they're glazing on the daily, their gains with AI stocks, tech, and everything else. So this is just to give you an idea that, hey, we are probably now entering the final stretch. And the final stretch doesn't mean, oh my God, this is all over January 2026. No, I don't think that's going to happen. But you have to be cognizant that we are now in that final stretch, that final 20% of time where prices really start to lift and the majority of the gains of the secular bull market take place here and now. This is one of my favorite quotes on the markets from the late Jesse Livermore. And I talked about this quote previously on this channel. And it goes along the lines of be right and sit tight. Men who can both be right and sit tight are uncommon. I found it one of the hardest things to learn. And as I reflect on 2025 and seeing gold and silver breaking out into new all-time highs, I've seen it all throughout social media. I've heard it from some people I know where they say, "Oh, I'm going to take some gains here. I think there's going to be a correction and I'll get a better entry point." And then you never hear them from them again and entering at a new lower entry point because the price has just rallied even higher. Even with Mexican Libertads over the last several years, for example, the 1998 that a lot of people are after, one of the key dates, I've seen people in the same names. You see them, they buy at 1,000 in the Facebook groups or in Reddit or some of the other avenues to buy. They'll buy at 1,000. They'll sell at 1,400 because they believe it's going to correct and they'll be able to get back in and get it again and squeeze some more juice out of it. But no, then you see them buy back in at like 1,600 or 1,700, and then the Libertad surges to 2,200, and then okay, I'm going to cash out here. I believe there'll be a correction and I'll get it cheaper. And no, it just surges higher, and the trend continues. And that's just it's not innate for humans to have patience. They always want to make moves. They always want to have a story to tell. So this is why it's so difficult to be right and sit tight. And here's the perfect storm in a chart, which is already outdated. We have silver almost at 76 an ounce right now as we speak. I think it's within about 30 cents. And this was caused by industrial demand that has drained silver. We've been in a deficit since 2020. This industrial demand is accelerating, and it's accelerating at the same time that investment demand has re-entered the market in 2025. And in terms of mining supply, it's not just something as flicking a switch and we're just going to start mining for silver. It's a whole operation that takes years to put together into place and to be up and running in production. So right now we have that perfect storm, everything in place, and it's showing up at the chart. And this is what's driving it. And now you basically have people who always depend on technical indicators and say, "Oh, the RSI is too high. It's time to sell out." sell because it's oversold and get back in at a lower price. And they've been telling this same story for over $20. And yes, I do believe we will have a correction at some point, but we got a long way to go. The crowd is not with us yet. I mentioned the Wall Street bets, 20 million investors. They're not in this. You have a Dow Gold ratio still above a 10. The crowd is still not in this. The crowd is still focused in on tech, on AI stocks, on Tesla. They're not in this. My Libertad aficionados, I have not forgotten about you. I promised you the last video we were going to deep dive the 1987 silver 1 ounce Libertad and why I believe it's far, far rarer than what its official mintage suggests. So the official mintage printed on Banco de Mexico's website in the CM27 report is 500,000 of these coins were minted. So on paper, it appears little more common. Not a key date, but also not mass produced relative wise compared to some other years. But most people, when they analyze the data on how rare a Libertad is, they just stop at the mintage and they say, oh, it's this mintage, it's this rare. And they don't take anything else into consideration. But as we're going to talk about today, how the real question is how many of these coins actually survived to today. There's economic behaviors, cultural behaviors in Mexico that have driven what I believe are changes, substantial changes to how many actually have survived to today. As I briefly mentioned in the last video, Mexico historically has not treated silver like a collectible. It's basically served as a savings mechanism. In many years where the Mexican peso has been devalued, I mean, that shapes cultural behavior and that gets people to look for alternatives to their currency. And a lot of Latin American countries, Mexico has even done it, they have historically converted their pesos to the US dollar. My wife, for example, is from Peru, and she grew up in the era of Alan Garcia and the hyperinflation. And so, if you were a family and you did not save in US dollars, you essentially were just wiped out of all your savings overnight. And so, 1987 was a very interesting year because you had a very significant collapse, over 50% collapse, and 12% of the collapse actually happened in one day when Mexico said we're not making US dollars accessible. And when they made that announcement, you had a 12% drop immediately. So households over time, they learn, if I'm not saving in dollars, then I'm saving in silver. And then they have that silver on hand during a crisis, and the Mexican peso gets devalued, and now their savings are not wiped out overnight. And Libertads, were treated as these types of assets. They did not go buy them and say, oh, now, wow, nice. This is a 1987. I'm going to take good care of it, make sure it gets no surface scratches. No, it was silver to them. It was made readily available. And they were not there saying this is a collectible. They were saying this is savings for me. So in Mexico, throughout many years of the 1980s, there was just repeated devaluation. And 1987, I chose 1987 because of the mintage. It was essentially claimed that the mintage was 500,000, but it was one of those years of the 80s with a very, very sizable Mexican peso devaluation. And it was almost 55% from the data I was able to pull. And basically, the confidence collapsed rapidly, so rapidly, as I mentioned, that in one day there was a 12% drop because the Mexican government said, hey, I'm so sorry, we're not making US dollars accessible. And so you could just imagine that, thankfully, culturally, Mexicans resort to silver and saving in silver, and that provides that emergency liquidity and these acute devaluations. This is what also made silver very interesting for Mexicans in 1987. In US dollar terms, depending, you buy at the beginning of the year and depending where you sold it in the year, silver rose in 1987 between 25 and 90%. And so basically, you have a Mexican peso that's being devalued and silver price in US dollar terms is surging, you're basically amplifying the gains from the devaluation. You're not only protecting yourself from the devaluation, but now you're actually amplifying and gaining your saving surge. And so local purchasing power for those that saved in silver, that goes up. So it becomes very rational at such a time period that, hey, you have to put food on the table. Maybe you're a Mexican family and you were looking to finally buy a house or build a house. And so this was kind of like the perfect combination of things to happen. And so 1987 Libertads, either they had them and sold them, or maybe the price surge and peso collapse caused the Mexican mint to say, yeah, we minted 500,000, but you know what? Price has gone up too fast. We're going to melt a whole bunch of them. And how proper is it that we've been talking about the perfect storm when it comes to silver here now in 2025? And we had a perfect storm with the Mexican Libertad in 1987. And that perfect storm was we had the Mexican peso devalued almost 55%, and silver in US dollar terms surging almost 100% that year. And so basically, the local silver value for those who saved in silver basically roughly doubles. And so the incentives were there in place and overwhelming to sell. What likely happened to these 1987 Libertads? Large quantities were sold into the local markets, and they were either melted, exported, or absorbed as just normal bullion. The other thing I've talked about before is that in Mexico, it was very common, and I learned this through a Mexican numismatist, that jewelers would buy Libertads. They would melt them as needed to produce jewelry. And they didn't sit there, buy a stack of them and say, hold on a second. Oh, this is a 98 or this is an 87. They didn't do that. They simply just melted them to produce jewelry. And then the other thing I've talked about before is it's likely maybe that the Mexican mint said, yes, we're publishing that we produced 500,000 of these, but oh, look at this. The silver price is also increasing in US dollar terms. Maybe we should melt them. It'll be profitable for us from when we commission minting these to what the price is now, instead of selling them to the public, all of them. Let's melt a huge chunk of these because it's profitable for us. And as I mentioned, in Mexico, it is changing in the last couple of years in terms of modern Mexican coins like the Libertad, but they were never treated as collectibles previously. This is only a recently new phenomenon the last couple of years. So I contend that the survival rate based on these factors is far lower than the published headline mintage. Then taking a conservative estimate and a liberal estimate of how many have likely been lost to being melted over the years, the estimated surviving mintage range is anywhere between 50,000 to 242,000. And this suddenly makes a 1987 more so a key date. If I had to predict, this is just a prediction. It may not happen, but I do believe in the next year or so, the going comps right now for the 87s, they're going to triple. Thanks for joining me on this perfect storm. We actually had silver within the last 10 minutes or so actually breach 76 an ounce, topping momentarily at $76.18 an ounce. And like I mentioned earlier, you got to vet the information being cranked out by the quote-unquote Asian AI guy. Make sure you do your homework. You don't just listen blindly. Make sure you have an exit strategy. And I'll see you next time.